Hey traders, welcome back to another E8 Markets YouTube video. I'm with my co-host,
Jake.
And today we are going to speak to a trader that you probably all know, Mr. Ken Chigbo.
Well, keep it short and sweet. Fundamentals are the reason why markets move the way they are. Like, people get so sucked into and fixated on the fact that there's prices on the screen, there's lines on the screen, but then they don't realize that that asset has to be, the value of that has to be informed some way. And the way that that's formed is through the fundamentals, right? Whether we're talking about the currency, whether we're talking about the stocks. If a currency or an economy is performing well, that asset should perform well. If the economy is performing bad, that asset's going to perform bad. You can't just pull out a price out of thin air. This whole market is built upon supply and demand. If we've got a nice performing economy because of X, Y, and Z, then there's going to be demand for that asset. If we haven't, then there's going to be weakness and there isn't going to be demand. So it's the absolute necessity, if you want to trade, that you need to understand, those fundamentals.
Would you say, simply put, that basically fundamentals move or make big players to make the decision, and then these big players basically move the market?
All the big players, like all the financial institutions, all the central banks, and bear in mind, these are the guys with the money, right? The retail guys aren't the money. The retail guys they're like little chihuahuas, because these guys are barking loudest on X and Instagram. And, the silent guys, the ones that are making the big power moves are the ones that are trading the fundamentals. Their decisions are based upon how well is an economy forming, how well do we forecast this asset, to perform in the coming 1, 2 months, 3 months, years down the line. So their decisions are firstly come on a fundamental basis. So their why, and then their technicals, and then their when. The macro for them is the map. The technicals is the GPS. Just shows them when they're getting in.
Yeah, that's really nice said.
I think a lot of traders don't, I say this in my perspective, a lot of traders don't necessarily care to know the fundamentals. But what I'm learning from both of you two, because you're both fundamental traders, is that the price follows macros, they follow economics, and they follow what's happening behind the scenes in the world. And who's buying dollars, who's selling yen, what is happening in the Chinese banks, what's the interest rate.
I think because fundamental might be a little bit more difficult or complex to understand than technical, because technical is charts, and most of the educators in this YouTube space and technically trading space, they're teaching technical analysis. I mean, when you start trading, what was the first strategy that you learned? Technical, right?
Yeah.
What was yours even?
So when you get into trading, the first thing that you need to know is how the markets move, regardless of whether the interest rate is high in the UK or in America. The flag pattern is still going to work, regardless if you know that or not. So you need to know the basics of how the markets move from a candlestick perspective.
Okay.
Yeah, so candlesticks.
All right, I agree to some extent, but I largely disagree, because you have a car, right? Or you've driven a car. So you know that a car moves this way. It moves this way, and you can maneuver. But do you know actually how to drive the car? You need to know how to drive the car. You can't just, charts go up and down, price go up and down, there's patterns, there's all different components to a car, but you need to know how to freaking drive it. We know that it goes this way and that way. So my point is, you can't just go in and trade, because even if you know basic technical patterns mean jack, SHIT, when, for example, if we've got a macro piece of news, a fundamental piece of news coming out, and it just invalidates whatever chart pattern you're looking at. So I agree to some extent, but I feel like you still need to know, otherwise you're going to be getting caught off guard every time by a high impact data or a theme that's happening, driving the markets.
When you started trading, was it firstly technical and then fundamental, or were you fundamental from the very beginning?
Well, I was fundamental from the beginning because I was an analyst, right? So that was my job, to understand why markets moved in the way they were. But when I first started trading, I tried to trade purely fundamentals. Like when we'd have, say, for example, a strong bit of GDP data from the UK or the US, I'd trade that. But then I never really had an exit strategy. I'd be able to get in. And it was easy back then, years ago, because cable would spike higher on stronger data, then it'd come down a little bit, then it'd go higher again. It's just easy to trade. But now it's not like that. So you need to have a whole plan. So I went the long way. I went a very, very long way around before I was profitable. So I went down the route of trading just fundamentals, was successful a little bit, and then failed. Then I tried to trade technicals, purely technical, because I thought, oh, these fundamentals aren't working. But it's because I wasn't putting them together. And then I was still failing. And then reason why is because of psychology. I wasn't able to deal with, if I had a losing streak or even just greed, giving back my gains. So it took me like really and truly probably a good 6 years before I actually became profitable.
So you were talking 3 different components. A lot of traders think it's 2, psychology and strategy, but it's psychology, strategy, and fundamentals. But why is fundamentals not as popular as strategies, ICT, SMC? Why does everybody care so much about the strategy?
I'll tell you why. It's because any Tom, Dick, and Harry can learn how to trade a chart technically. And a lot of people won't want to hear that, but people are so, they're somewhat intimidated and fearful of the idea of fundamentals because they seem so complex. Because the reason being is when you watch like CNBC or Bloomberg, the traditional news channels, they put so much jargon in your head, in your ear, and it's just like, whoa, you can bust. And they don't simplify it for the everyday person. But really, if you actually break down what I need to know, okay, is this economy performing well? Is the economy growing or is it expanding? Are jobs being made or are they being lost? Have we got unemployment going up? Is inflation high or is it low? And when you start stripping it down to basic data points like that, and just knowing if that's bullish or bearish for the currency you're trading, it's super easy to have a macro view as you would technically. But people are just a bit put off by it. They're scared, they don't know how to start.
Yeah, I think fundamentals also like moving in patterns. That is very similar to technical. When you trade fair value gaps or candlestick formations, it's patterns basically, right? And in fundamentals, I think, I don't know if you're going to agree, but it's probably the same. If you have a pattern of, let's say, ECB or any other central bank raising or having high inflation, you can expect them to raise the interest rate, which is for me as well patterns. So if you learn these indicators and their patterns, like how they are connected to each other, you're basically learning the fundamentals this way. Or how did you learn the fundamentals, you personally?
How did I learn them?
Yeah.
Well, I started off with the central banks, okay? Because obviously the central banks, these are the guys that I call them the biggest manipulators of the market. These guys, everything that they say, they know what they're going to be doing in terms of moving whatever assets, right? Whether that's the stock market or whether that's directly the currency. So whatever the central banks are doing, these guys are the most, they are the most informed when it comes to the asset that you're trading, about the economy. So these guys are dictating where those assets are going, whether they're going to be raising or cutting rates. So I started off with the central banks, understanding what their decisions meant, right? So obviously, as you just said there, Jake, like central banks in the day, for anyone who doesn't know, when we're raising interest rates when the economy's good. So typically speaking, that should be positive for the currency that we're trading. So I know that, okay, if a central bank starts communicating to me that they're going to, well, they won't necessarily say that we are raising rates. What they will say is the economy's growing well, labor market's tight, is strong, inflation's high. So then that's a signal for me, like you'd see all your technical, your confluences, that's a signal for me to start potentially having a bullish bias on GBP. Yeah. So I'll be looking to buy pound. Every time the pound dips, I'll know that, okay, the central banks have said this. So every time I see a dip, I'm going to see that as an opportunity to buy. So I will definitely start off with the central banks. And then I will then start looking at all the everything the central bank's talking about, growth. So I'll look at GDP, the labor market, I'll look at unemployment rate, I'll look at jobs being added, inflation, I'll look at CPI. So everything is there, is communicated to us. It's just then just breaking it down and just doing a little bit of reading,
Yeah.
So, sorry, for the traders who don't know, for example, the labor market and all the details that you said there, can you explain a little bit about what the specifics are for how a currency would move up, for example?
Yeah, definitely. I mean, look, at the end of the day, it's so if we let's start off with jobs. People see it like this. If we have a lot of jobs being added, so every month we will get reports from various governments as to an overall, in terms of sort of government-based roles, public jobs, private jobs, how many jobs are being added in the economy. So obviously, if we've got a lot of jobs being added and obviously unemployment's going down, people aren't claiming unemployment, that means we've got a lot of people in the workforce to go out and spend money. So they're stimulating the economy's expanding. And then of course, when people are spending money, price of goods, services rise. So that's positive for a currency. When we're looking at what I just said about inflation, obviously if people are in work and people are spending money and the economy's growing, obviously price of goods, services going up. So then a central bank would have to look at raising rates. And the reason being is, okay, so say you have a mortgage or a loan or a credit card, you have interest that needs to be paid on that. Okay, so if your interest starts going up, the central bank's like, look, we need to raise rates. The reason they're doing that is to try and discourage some of your spending, because they're like, whoa, okay, all these people are working, all these people are spending money, prices are going up too much, we need to slow this the hell down. So they'll raise your costs to try and discourage some spending, try and discourage businesses from, expanding too quickly, to slow things down a little bit. But then also see it as this thing. When they're raising rates, it's also good for the economy because loads of money is coming in. If you're a foreign investor and you want to go invest in, say, we're based in the UK, we want to go invest in the United States. If the United States is offering a good rate of return because the central bank's raising rates, you're going to want to put your money there because you're getting a good return.
Which will then raise pound, for example.
Yeah, because obviously in order to invest in the UK or the US, you need that respective currency. So the demand goes up and the value goes up.
Okay, so it's incredibly important, and you guys are both letting me understand this over time, and I'm realizing how much impact it actually has in the markets. Why are traders not paying attention to this? Why is every trader on Instagram, on YouTube talking about ICT, SMC, liquidity sweeps, and intraday trading strategies?
What's your view on it, Jake?
I think it's more complex to understand because Ken said it well. For me, when I explain fundamentals to someone, I use an example of pyramid or triangle where on the top is the central bank, and then it goes down to economic indicators. And you basically, when you're trading fundamentals, you're trading expectations. So you've got all those indicators, economics indicators.
Yeah, so you're collecting data.
Yeah, and you, based on the data, are building some expectations. What going to do the central bank? So traders, they just see a bunch of economic indicators. They don't know what they mean. They don't know how they are connected. For example, like personal spending, personal income, and retail sales, how they influence the inflation. So, for them, it's a whole new world. Well, there's not much of a content on YouTube or on the internet of fundamental traders explaining this. Then there's a lot of traders, technical ones, who trading support resistances, the fair value gaps, and so on. So I think the biggest problem is that not having enough educational material on the internet.
That's true. And I just think, I think there's a lot of, I'm just trying to use the right word here. I feel like there's a lot of wrong people coming into trading because it is like, you have to remember these financial markets are so freaking complex. Like, you got to understand that these big boys are really, on average, some of the big boys are making between 25-30%, which is a very good year. People come in, the wrong mindsets come in with a total misconception about trading and financial markets. This is a complex freaking beast. This is like one of the hardest crafts to master. So people come in, look at thinking they can mark up a few lines on the chart and they're going to make money. But I know I simplified it in terms of fundamentals, but you do have to have some form of intelligence about you. When you're just marking lines on a chart, I feel like there's zero intelligence behind that. And I know people aren't gonna like it, but I'm being serious because you have to use your brain. You have to really use your brain to understand the fundamentals. Yeah. And I mean, if a lot of people, as I say, a lot of wrong people coming into this game and just not programmed or just don't have the right brain capacity or mindset to conquer the markets correctly. Look at everyone. I know. I like to think that obviously there's a massive gap, and I'd like that gap to be narrowed between professional and retail traders. But there's a serious reason why 90% of retail traders fail, and then you've got the professionals, the polished, intelligent guys that are succeeding and making money.
The professional traders are all trading fundamentals.
Well, at least the big players.
From what I've seen, majority of the hedge fund and prop firm or traditional prop firm traders are trading with macro data.
The institutions and big players do. Yeah.
And the thing is, not all of them, like,
they're not putting boxes on a chart or trend lines on a chart. But then there are successful traders that have got no clue about fundamentals, about the interest rates, about the GDP, and they're milking the markets
course.
consistently.
Because I think that the pattern of the fundamental analysis then is projected into technical analysis. So whatever happened before, like in fundamental analysis, bank raising interest rates, it happened previously, and then it left the same pattern on a candlestick. And traders basically trading the fundamental only projected into the charts.
Okay.
Exactly. That's a very good point.
Yeah, that's why
That's
I
a
believe.
very good
And on
point.
the other hand, we've got these big players, as you said, the institutions, the big banks. They all follow fundamental because they report on a fundamental. And the biggest trades, like George Soros, it was like when he crashed the Bank of England, it was based on fundamentals. So I think
and the Big Short.
yeah, it's mostly based on the fundamentals. That's why big players are following and reporting on fundamental analysis. So, yeah.
Obviously, look, at the end of the day, I'm not saying, I know there's some brilliant traders, and I've got a lot of them in my network that's trade specifically technicals, and they're very successful at their craft because they've become, so obsessed with it. They've done the back testing. At the end of the day, like I always say, when it comes to technicals, when you're trading technicals, the data's there to the left of the chart. History, it does repeat itself.
Yeah.
The market does respect those key levels. And a lot of these guys, their strategies, whether it's ICT, SMC, however they're approaching the mark, they're still marking up very key levels, key areas that have been there in the past. So yes, they can milk the markets if they have that discipline and they continue to follow, their strategy and rules. But I know, fact, hand on heart, these guys, if they do actually understand the markets that they're trading more deeply on a macro level, their edge will largely improve 100%.
So can you day trade with fundamentals?
It's a little bit more tricky. I think there's a lot more.
My perspective is that it's only swing trading, medium trading is fundamentals. I don't, unless you're trading FOMC.
Like
you're
news
predicting
trading.
FOMC.
Yeah, well, when you're not predicting, you're basically
So
gambling.
it's fundamental news trading. Is fundamental news trading?
Is it news trade?
Sorry, is trading FOMC fundamental trading? Would you class that as fundamental trading? If I'm just looking at FOMC.
I will just say what Jake said, and it is gambling. Like for me personally, I never trade the news. I trade on the back of the news once the markets have settled, because people that trade the news, you've seen all these memes on like Instagram and stuff. Those guys counting down 1, 2, 3, and like up, and it just goes the other way. So like it's a gamble at the end of the day because you never know what these guys are going to do. But the important thing is allow the markets to digest, understand what the central bank has said, and then see which way the market wants to go on the back of what these guys have said. Let the dust settle. So I will never trade the news. There are times if I have a position, I've got enough wiggle room in my position that I'll let it run during the data if my bias is there for it and I expect it to be go in my favor. But otherwise, typically speaking, I will close out the trade ahead of the high impact event. Because it's like FOMC, you saw what happened at the last one, the decision for what much more September now. It wicked, like dollar went down, then it went up, then it went down, and then it went freaking up again. It's just like a freaking roller coaster.
Yeah, we were actually watching it on the live stream,
yeah,
right?
we're watching it.
Yeah.
So you just can't. You can trade it, but I mean, you might get lucky 1 or 2 times if you're trying to scalp it or day trade it. But then you're going to get taken out at some point. It's just not sustainable.
Okay, so for the traders that are coming into the space, and because all the influencers, all the traders that are on YouTube are only talking about technicals, what are the ways that you learn to understand fundamentals? Where is a platform that you can learn fundamentals, macros?
Yeah. I mean, even like I was working in the job, and this is what I said about having like the brain capacity. It's because I feel like I didn't really, I was just fortunate enough to be a hard worker and be tenacious enough as a young boy to get an opportunity that I did. But when I was reading a lot of it through sort of Bloomberg, CNBC, listening and reading, I was banging my head against a brick wall, like serious internal bleeding, because it's so hard, man. But I think now things are a lot more simplified. So if I was to recommend people, I would start off with checking out actually now, like Action Forex, check out FX Street, check out Forex Live, now called Investing Live. Even now, Reuters and CNBC, they're catering towards the retail guys. They write these nice little summary pieces. So just read, watch videos, and write, and just learn. I said start off with the data, start with the central bank, start off with the data, and then just start to observe, do some back testing.
For those that don't know, what is your background, or how did you get into the fundamental world?
Yeah, so at the age of 16, I was a T-boy on a trading floor, like a real proprietary trading floor, not real proprietary trading floor. They were called Schneider Trading. So if anyone wants to go and check that out, they're bought by Marek. So they were in the heart of London, Liverpool Street. So yeah, I was a T-boy. So I'd get the traders on the trade floor, their, breakfast, lunches, dinners, dry cleaning, everything, all sorts. And I was hungry. I kept going back there on my school holidays. And then I was supposed to go to university, but I ended up missing the university I wanted to go to by 1 grade. And I remember calling my mum first. I was like, I've just missed out. Dad's going to be furious. I was so scared to call my dad. And then she's like, look, don't worry. Why don't you call the guys I was working for, see if there's anything there. So then I called them. They're like, yeah, come back as a runner and we'll see what we can do. And apparently there was some, the analysts that worked, the analysts fed all the fundamental information to the traders. So they said, we really like him. Bring him in for a couple of weeks to trial. So I went in there and I showed how hungry I was. And they offered me, after 2 weeks, they offered me a position. So as a junior analyst, and it was excruciating in the sense of like going straight into work, and it was 12, 13-hour days. So I'd be in 5:45 before the European Open, and then I'd leave gone 6 p.m. Some nights 7. And if you left early, this is toxic, but if you left, say for example, I was trying to leave at 5:30, they'd be like, half day, is it? It's like, wow. And I remember there's one time, anyway, not scare people off this taking this route, but there was one time, because I was just smashing the coffees I was 18, 19, and I remember one day I just must have had a breakdown, and you picture it. So this was all glass building,
yeah.
And then one day, like, I had a breakdown. I must have had like a panic attack, and then I was
from the coffees.
Yeah, from the coffees and just the freaking environment. And I was taken into like a wheelchair by an ambulance like this with oxygen there, like one of those. And then it wheeled me out and took me into the ambulance. Oh, it's brutal. Yeah, so it ended up just being a panic attack anyway. It's horrible. Yeah, man. And
wow.
Yeah, so
I didn't realize it was that intense. I mean, I've heard stories inside trading floors, but the fact that you got wheeled out.
I still feel it now. It's like there, like it's like this. Oxygen. Scary.
Oh man.
Oh God, yeah. But the thing is as well, this company where I was working for as well, they made me. Well, they didn't make me, but I kind of had no choice. I had to switch over from the European hours I was doing to then Asian hours. So we'd launch like an overnight session, so it's cover Asian session. So then, imagine I was doing I'd get in at 9 p.m, then I'd leave the next morning, do the handover at like 6 a.m. It was intense. So I was switching from that, like not bi-weekly, every 2 weeks. I was switching from Asian shift to the European shift.
So that in between period, I guess you had a day or two to kind of adjust, or was it just
it was
today you're staying up for 24 hours?
Yeah, it was like a couple of days, and then you'd switch back over.
Wow.
And I just had no life, obviously. It was weird, but I saw that as my university anyway, because I learned a lot, and I don't regret any of it, because obviously I wouldn't be here today, if I didn't learn all that information.
I didn't know there are night shifts like that, like with on trading floor.
Oh yeah, of course.
This was in London.
This is in London. Of course they do. You have to cover Asian markets. There's traders that trade Asian session.
Yeah,
but I would assume they had an Asian branch for that. And
no,
then we just hand it over to the Asian branch.
We didn't. That's why we were testing it out, launching it in London, and then eventually I think they got Asia, but I'd left by this point.
Yeah. So would you recommend, because I've learned also fundamental just because I work for a company that operated on foreign exchange market. Would you recommend to anyone just to get a job in any financial company just to get some sort of basic knowledge about fundamentals?
I don't necessarily recommend it, but I think it's a great way to get that experience and that exposure. It's invaluable at the end of the day. Like my little brother, well, say little brother, he's taller than me now, but he works at a big one of the big 4 auditing companies, and he's 19 years old, or is he 20? One of the two. But he's had times when it's got tough, like how it felt for me. I was like, man, just see this through, give it a few more years, and like you'll come out like strong on top, because you would have gained that exposure, that experience, like how things work, how different companies run, like the financial market. You're right in the heart of it.
Yeah.
So I see it as invaluable. If you have the opportunity to do it, I've had so many people like within the trading community have said, Ken, I want to do this broking or whatever. Do you think I should? And I was like, yeah, it's a great experience. Like, why not? But you don't need it.
And the connections, right, are incredible.
And the connections.
Yeah.
Yeah, like at the end of the day.
You're rubbing shoulders with incredible people.
Exactly. You build your network. So I take that route if you think you can hack it.
If not, you just get wheeled out on a wheelchair.
Yeah. Jake, you're from the broking scene, aren't you? Originally,
what
years
do you mean?
ago.
From brokers?
So you've worked within a broker and financial markets?
Yeah, I've learned basically fundamentals from fintech company.
Yeah.
And basically, I was promised to be analyst if I'll just do a good job. They were basically forwarding big clients, exporters, importers, so we had to watch central bank's decisions and listen every day an analyst so we know what to tell the client. And this is basically how I got the basic education. Then I worked for brokers. I didn't learn much about fundamental analysis there, but it definitely helped me working for the fintech for first 2 years, because this is where I started trading at 17 probably, and then 20 got the job. Until then I was technical, just like Joel, and then it changed basically because I saw how the big players basically are just listening the fundamentals, and also the big players are also exporters, importers, because they're setting really huge orders on the market.
Exactly.
So yeah, it's just switched in me. I said, okay, probably the fundamentals are the ones that moves the market.
How did your trading improve from
Better. I was trying to trade intraday trading, which I don't believe really. My belief is that if there are successful traders, like the biggest proportion of successful traders, they are either really short term or really long term, like not in the middle.
What's really short term to you?
Scalpers, like either algorithms at banks, or then some random guys in Asia building algorithms. Those are really successful, or then being swing traders, position traders. So intraday trading, I know there are people, even with the markets, who are being successful with day trading, but I think that's the smallest proportion between trading, like if you take a look at the styles. I mean, what's your take on this? Do you think that intraday trading is like possible, or you are a swing trader or intraday trader?
I am largely in swing, but most recently, since January, since Trump's situation where things have been like choppy, I've been more intraday.
Okay.
On the majors, on minor effects, there's more opportunities for swings for me. But I was going to say something actually. So you were talking before about we were talking about the financial institutions, the big boys trading macros, but obviously these guys also largely like a large portion of the market is now traded electronically, via systems, algos, quant trading, that's the way the market's going. And obviously with that, the market's becoming a lot more competitive, because now before it was how quickly can you press buy or sell? That's what I experienced. But now it's, you're just competing against machines. So in order to have an edge, if you want longevity and consistency, you're going to really need those fundamentals, because otherwise you're not competing against machines. There's no chance.
Yeah,
it's funny. I look back at the charts. 2016. Look through an hourly chart. Look through a 4-hourly chart, and you can see the difference in volume from 2016 until 2025. The amount of volume that has now come into the markets with quant trading, EAs, it's incredible.
Yeah, and banks have been doing it for a long time. I think they've realized at first that basically not only that, what is my belief is that more robotic you are as a person, the better trader you are. If you take aside the trading psychology. Yeah. I think bank realized it, and they invest a lot of money into algorithms and trading that. So it's getting bigger.
I think it's more about now getting programmers in to code, rather than getting traders in to analyze with their human emotions.
Yeah, and I don't think that banks actually do some intraday. I think they do just the smaller time frames trading.
No, there's still prop traders that are doing intraday.
Yeah, they are. Yeah. They are.
Sorry, go on, Joe.
No. Yeah.
I was just going to say, you have to remember the mental capacity that trading takes, especially if you're an intraday trader, if you're a scalper, the mental capacity and the pressure on your body is insane.
Yeah.
I've spoken to a number and worked with a number of capital management companies, and there's a company that I work with at the moment. They're based in Dubai, and they have, in terms of numbers, they have 120 million at the moment in terms of capacity to delegate. They're constantly looking for portfolio managers, and right now they've only utilized 8%. They've used 8% of that 120 million dollars because they're struggling to find portfolio managers that have, consistency and longevity. They've had a number of people that have come in that have solid strategies that intraday and scalp, but they burn out. They burn out. It's tough, to do that. So it's so intense.
I mean, I think it's because I think you can relate. If you are trading lower time frames, you're trading bigger lot size than if you're trading for 200, 300 pips. And if you look at the chart, and if you especially look at the profit or loss, and it's just, hovering upside down, and if you swing trader, it's not a big amount actually.
This is what I was jealous about the Malaysian trader, is that he placed the trade and then 2 weeks he was just watching the markets. I don't know how much his emotions fluctuated during that period, but I just thought, when I'm trading during the week, I'm stressed and I'm not sleeping because I'm monitoring my trades during the Asian session, which a robot can't do for me. I have to do that. By Thursday, Friday, I'm completely dead.
Yeah,
I'm tired because I just can't have the mental capability to be able to still look at those swing trades.
Is this the guy that did the 33K?
Yeah, 33K
yeah.
on gold.
So was he trading like 24/7 more or less, scalping, or how did that?
No, he was holding it. Do you remember when gold was going sideways and we were talking about we're going to buy it, but it's still going sideways? And the last wave before it exploded towards the up, he bought it at the very bottom, and just hold it towards 37,000. Yeah, 3.7k price. So he did really well on that trade, and he was swing trader. So he just opened a trade and held it.
Nice.
And I think it's better, not also from the psychological standpoint, but also how much time you invest, because a lot of traders don't have savings and time to be intraday traders. That's why I mostly recommend to go either for scalp by 1 hour a day, London session or New York session, or then do swing trading and check the charts 1-2 times a day for a few minutes.
That's if you have the discipline to do that, because with the scalping, it's so easy to just get sucked in and you're just there like Bradley Cooper from Limitless, trying to freaking milk the market as much as possible. It's intense. But if you have the discipline, definitely, if you can be in and out and be done, and that's it.
Yeah, but it's shutting down the laptop at the end of the day.
Yeah.
And not there was a trader that did 200k in a night in an Asian session on another prop firm, and he just kept on going. By 4 a.m., he had lost the entire 200k that he had made, and just burnt the account.
Wow.
So
I'm not surprised.
It's making the profits and then closing the laptop and then saying, okay, let me take my payout.
Yeah, but then you need to also handle the greed and so on, because I think it's more stressing to do scalping than swing trading.
God,
100%.
Being conservative swing trader is the best way, how to get less stressful into the industry.
So is fundamental trading stressful?
Sometimes because there are times when, if you have, I'm sure you've had it a number of times, Jake, where you have a fundamental view, right? But then the central bank goes and does something else, and then they just completely shift your view.
Yeah, we had it with the RBA actually.
Yeah, with the RBA.
So, with bollocks.
And then they went and cut rates later down the line anyway, when they should have. So at times it can be, not so much stressful, but it's a little bit like a punch in my ego, I guess. It's like, man, this doesn't make sense. Why are you not cutting rates now, for example? But it isn't too much stressful. No more stressful than trying to analyze technically.
And I think you did also a really good job. I just remembered when we were speaking about the RBA with the conspiracy theory about the labor market in the US, the NFPs, which Matt, I don't know where you came up with this conspiracy theory, but it just went actually how you said it. It was really good. It was really good.
What was this?
No, so basically I was saying it was when Trump had fired the head of the BLS, the Bureau of Labor Statistics.
Okay.
So the Bureau of Labor Statistics is the one that does the NFP number. So he'd fired him because essentially the number had been revised sharply lower at one reading. And Trump was like, well, someone's manipulating the numbers there. And so I was saying at the next set of data, what did I say?
It's going to be smaller, the number, in order for them to basically push back on the Fed.
Oh, from the Fed for rate cuts. Yeah, I was like, because obviously what Trump was going to do, Trump was just going to put someone in there that essentially that he can control, his puppet. right? And I was like,
He was going to change Jerome. He wanted
he
Jerome
wanted
out.
Yeah,
for a
we'll
long
talk
time.
about this actually. I'll cover it because it's interesting. But yeah, I was like, as soon as this next person comes in that replaces, we're going to get bad numbers. The numbers are going to be manipulated. And we saw that. And obviously that gave the green light because Trump was obviously screaming for rate cuts. And it gave the green light. And then obviously they did cut. And then this is what I said. I was like, I guarantee now, obviously now they can start saying the labor market is weakening. So then the whole point of the September rate cut was because the labor market is weakening. So they got their green light from that data. So yeah, it's all manipulated. Like you just never know what to believe. And then Trump went and put one of his puppets in the Fed, it's Stephen Miran. And Stephen Miran, as soon as he gets in, the first decision, he's the only member that voted for 50 basis points rate cut. He's calling for rates to be cut by 1.25% by the end of the year. So like, you just know Trump's there messaging him being like, good job, man. Yeah. So
But it worked really well because the expectations for the numbers is to be higher, and US basically claiming that they're going to put it down, and they actually did put it down, and dollar just dropped. It was really good. I was watching that market on the NFP, and I was worrying that I didn't do enough big position. It was really good.
yeah.
You guys caught the gold, didn't you? That gold rally that we were talking about.
The most recent
Malaysian
one.
trader, yeah. This last push to the high.
We called it.
Yeah.
We were talking about it for weeks, weren't we, Jake?
Yeah.
A good 2 weeks we were talking about it. We were like, this is going to break out. And then, boy, it was a huge breakout. I mean, I didn't obviously catch the big move like this guy, but I got in, so-and-so on the journey to the upside. But
a little bit more conservative, waited till the gold actually like exploded. But the Malaysian guy, he got it from the very bottom. But I was waiting for also the Fed to bring a little bit of dovish tone at the same time to break above that range, because it was trading in a range. I don't like that till it's in the range. And once we broke above that range, I was trading just the sentiment, because a lot of traders were for some reason trying to sell. So we were just creating new higher highs.
Exactly.
And that was the trade.
And just talking about gold quickly now, like this is the sole reason. Gold is an asset.
That was the proof. Sorry, the gold bullish move was the proof for me, because I'm not looking at any sort of fundamentals. Gold for me, you were talking about it, Jake was talking about it, and I saw it happen, and it moved beautifully.
Exactly.
That was my proof of fundamentals.
Exactly. Gold is an asset that's largely dependent on fundamentals. And I'll go back to what I said before about supply and demand. As with any asset, if there's demand there, the price going up. And the data's there. Like, this is what I mean. For example, the World Council will release reports, monthly, quarterly reports on who's buying gold. And in their reports, you can see central bank buying from China, India, Russia, and a couple of other sovereigns. The buying's going up. So that if they're buying more, then obviously the price is going to rise, right? And then, of course, when there's all this geopolitical tension we've seen in the Middle East, we've seen Russia, NATO. This is all, gold's a safe haven. It's a store of value. So it's protection. So people buy it. And then when central banks like the FMC are cutting rates, what happens is rates go down on bonds that people invest in, the treasuries. So what you get is what's known as asset rotation, capital rotation, where people rotate out of treasuries and then they go and put their money in gold so they can get a yield, because the yield on the treasury is going down. But gold, they see that is potentially going to be going up in terms of value. So they invest there. And so it's fundamentals.
I think Jake and I were having a conversation about how if you would just buy gold on your EA account and just buying it, slowly buying it, you would pass and you'd be making consistent money just simply by buying gold over the last 2 years, 3 years.
That's true. A lot of traders did actually on the live stream. I was very happy about it, and they were happy also. So it was a nice trade on a gold. It happens once a time, but when it happens, it's really good.
So guys, what you've got the macros, you've got the GDPs, the FOMCs, right? This is one sector of it. You're smiling.
Yeah, no, this is.
I'm getting into my fundamental lingo now. What does the wars have to impact with the charts, and how do you sort of gather that information? And unfortunately, there are these situations, but how do traders capitalize on these?
God, I always feel funny about this because
it's a hard one to talk about because it's obviously very negative in the world.
Yeah,
but traders they don't wait for these events, but they are making money off the back end of
definitely
misfortune and horrible situations.
Yeah, it's funny. Well, not funny, but when there was a time, without going into specifics in detail, but in October, whenever it was, October a couple of years ago, the incident happened in the Middle East, and I made quite a bit of money off that, of gold, because I saw it happen, and I managed to get, decent profits on it, and then I just felt like it was blood money. I was talking to my partner and just like, this is bad. So I remember just donating some money, and I was like, yeah, I feel a bit better now. But there are those instances. That's the thing. Like, this is just how the markets are, and it's a shame but if you can capitalize and do some good, then do it. Just when it comes to war, just know that it's safe haven flows. So stocks tend to go down in uncertainty. It depends where the war is. Oil prices, if it's in a country that produces a lot of oil, and there's fears that this war could disrupt oil production, then prices of oil is going to go up. Gold's going to go up, and uncertainty, as we're seeing at the moment. War or tension plays a massive part in influencing market sentiment. Mm-hmm. What were you going to say, Jason?
Yeah, I would just say that feeling bad about taking trade when something bad happens, I mean, not taking the trade wouldn't influence that happening at all, that event. So, it has nothing to do with that. Mm-hmm. It should not be like celebrated extremely, but it's a completely different story. I was just thinking about the wars and what happened in Russia, Ukraine, the Middle East, and so on. And I think that's the reason why the news trading is so dangerous, because you can't basically forecast the indicators like inflation and so on, because you can, again, as I was saying, the connection between the economic indicators, then you can go one by one and then get some sort of a forecast for inflation earlier. But then there are events just like this who play pivotal role, and you can't watch it all. So yeah, that's the risk factor of the news trading.
But then obviously we have to remember that with those, they're themes. Okay, so dependent on how larger a theme it is, it will play an impact in still pushing that price. In what direction. Obviously, it gets to a point where sometimes this is how savage it is. This is why sometimes I feel freaking guilty, because it's like, at some point it gets priced in, so the markets are bored of it. So say what's happening in the Middle East, there's basically not enough blood for these guys, for the markets to be like, okay, we need to buy more gold, basically. They need to see something more drastic happening.
Oh, so pushing it.
Yeah, because otherwise it's baked in, it's priced in, let's forget about it, swept under the rug. They don't care unless something more happens. Yeah. So,
But it's interesting that gold's kept moving. I thought that because Jake was actually buying gold when I was looking to short it.
Oh yeah,
and we had a whole joke about this. But I thought that gold was done. I thought that all of the situations, like, there wasn't enough for it to continue moving, and then we got another wave to the upside.
And it's actually like when you take a look at the fundamentals, and you have still fundamentals positive for the gold. A lot of traders are trying to, like you, saying, it's end of the bull run, we're going to go down. So a lot of traders are trying to sell the possible correction, let's say. And if they would follow the fundamentals and still see that fundamentally is gold bullish, they wouldn't be trying to do that. But they didn't understand the fundamentals, so they said, okay, we are too overbought.
This is where it gets complex, because you've got technicals, sentiment, fundamental. So I'm looking at psychology. And I'm very good at looking at the crypto market on a longer scale of where people have got more fear, where people have got more greed. And then you've got the other side, which is the fundamentals. And then you've got the other side, which is the technicals. It's like grabbing these three and mastering all of the cheese, like getting the infinity stones and snapping your fingers.
Good analogy.
Jake, you really trade. Yeah, it's a good point.
Yeah.
You really trade from the opposite view from retail sentiment, don't you?
The sentiment?
Yeah,
I do watch market sentiment a lot. It was a recent strategy. Not recent. I'm testing it for like 2 years.
Sentimental what?
Market sentiment.
What you mentioned.
Yeah,
I'm basically watching big players, if they are still long on euro, and then retails. And I usually want to go with big players and against the small players. That's why I usually I tend to. And if that fits fundamental analysis, that's a trade for me. So if Euro USD, let's say European Central Bank is hawkish and Fed is cutting the rates, at the same time I see on BOC report that big players are going long. It's delayed, but still they're going long. And retail sentiment on Euro USD is short. So people trying to catch the correction or just thinking market is overbought, we're going to go down, I'm going to catch this big trend towards the downside, I'm taking long.
So you're combining the two then?
Yeah, market sentiment and
combining
fundamental.
the
But
two,
just
yeah.
recently, before like 4 years ago, I was just watching the fundamental analysis. But sentiment for me is one of the pivotal aspects in strategy.
Okay.
I've seen this like so many times where, and I generally do think it comes down to people not digesting information that's out there. Like, you know, when we have the big players, say for example, retail market are really long oil, for example, right? But they're unaware of the actual fundamentals where this is going to tank at any given time because of X, Y, and Z fundamental that they're not paying attention to. So as Jake said, and I've seen it on numerous occasions where the retail market's long, and then it's like we've got all these fundamentals that are just going to force this asset to drop.
Yeah.
I'm looking at that, rubbing my hands together and be like, yeah, these guys are the liquidity. That's
Yeah.
why they're there. They
Yeah.
exist because of that.
Yeah.
You know, I saw an article not long ago in Bloomberg, and they're just noting about the increase of, for example, mums coming to try and trade. It just,
Yeah.
I was just thinking, yeah, bring me some more of this. Like, these are the liquidity that we need. No, but it's true though. And if the guys actually pay attention to actually understand, that's what I mean about the asset they're trading, they won't get caught. They'll get caught off guard less.
Yeah.
You know, so.
And we were talking about it with Sam and on Expo as well, with the guy that I had done the podcast, that if you have unsuccessful traders, what you do is counter them.
Yeah.
So yeah, when I see retail sentiment about 70-80% going long, of course I'm going to go short.
Yeah,
if the
because
fund
you're
is
using
played with.
sentiment, aren't you?
I do.
Yeah,
I do.
you're
Yeah,
using
yeah.
sentiment.
Yeah, and I like it, and it play well with Euro USD so many times. Like just creating new high highs, taking those 30-40 pips for new high when basically retail traders are majority against you, because 90% of retail is losing money. So
Yeah,
what's the
but
point
then-
going with them?
Yeah, exactly. Yeah, exactly.
Yeah, what's
Yeah. So that's the market sentiment. It's you can combine technical fundamental market sentiment. Sometimes I do, because Angel brought it up, the fair value gaps. So now I'm testing the fair value gaps. Also sometimes highlight your channel. So yeah, I'm testing all the different things, just adding to the strategy. I think that the markets are like still evolving. So I'm just trying to push the strategy to more perfection. Yeah. Why even, because you didn't answer it, why did you even not try to learn the fundamentals? Why are you just purely technical?
Man, I feel like I just got so dragged into the technical world that I just didn't care. And then I thought everybody that traded fundamentals are just nerds. It's just too much information that I didn't need to know. And I saw patterns to do with psychology happen over and over again. And I didn't need to know what Trump was talking about or what the rates of inflation are. It didn't affect my trading, so I didn't need to know. But I think as the world is becoming more connected and a lot of people are talking and pushing the news and it's in front of your faces all day, it's becoming more prominent in what's actually, driving the markets.
Yeah.
In my eyes, anyway.
If you now had to learn Joe the fundamentals, where do you say
Still
him
wouldn't-
to
still wouldn't
where
learn
to
them.
start?
Still don't care.
Where do you think
Where
he
you
would
should start?
Yeah.
Start off with the Forex Factory.
Yeah.
understanding.
No,
okay, the
yeah,
news, the reading the
yeah,
news.
but
Okay.
I don't feel like there's easy, accessible knowledge. Again, it's like a minefield.
It is,
on
to be fair.
FX Street and on Forex Factory. I just look at, okay, do we have FOMC this month?
But when you were learning technical, you also was browsing on the internet and YouTube, just looking for the terms, looking for the patterns and candlesticks.
Exactly.
So you do the same with the fundamental.
Yeah, but
You-
it's not as in your face.
Go back to one of your first time you marked up charts technically. I guarantee your chart was heavily polluted with a lot of shit.
Yeah.
And all sorts of lines on there. So it's very easy that's a minefield as well, is you can get serious
that's true.
analysis
That's
paralysis.
true. That's true.
You can mark up so many different trend lines. There's so many ways to, the way you mark up something may be completely different to me. Like, it's so easy to get analysis paralysis, whereas the fundamentals are freaking black and white. Is the economy expanding or not?
Yeah.
Simple as that.
Yeah.
That's a good point. That's a good point. Yeah,
Yeah.
technicals can see
Yeah.
like the
Because
chart
you
very
put your own
differently.
perspective on it, don't you?
Yeah.
You put your own twist on what you're seeing, and that's
Exactly.
your perspective. If it's the fundamentals, then it's like the global look at what's
Yeah.
happening in the world.
And
I understand
more or
that.
less like majority is matched. When there's increase in inflation, you expect central bank to react to it.
Yeah.
And most of the fundamentals see the same way. However, technicals, if you're using Fibor and if you're using fair value gap, you might have different levels for Fibor, different levels for fair value gap. So you see market differently.
I'm guarantee if you go and stare at your chart later, pull up your chart, go and mark up your analysis of how you mark up your analysis, and then go and see if you can see the market a different way, opposing your view. You'll find it straight away, without a shadow of doubt. The amount of times I can do that, I can go and mark up a chart, and I can go and see the opposing view straight away. And it's, but sort of.
Yeah, but then you're always battling with yourself of is this a long, is this a short?
Well, yeah, exactly. That's why I said it's easy to get analysis paralysis on technicals. But then if you've got your fundamental reason, then you've got a big confluence there for your original markup.
So you're using the technicals to do the basics, and then you're using the fundamentals to then go ahead and give that confirmation. Yeah,
exactly.
Yeah,
I'm using fundamentals to get the bias, and then technical to confirm where I'm going to enter the market.
Okay, so how much technicals do you guys use as a percentage?
It's 50-50 for me. I mean, let me be honest. I didn't want to say it, but I use more technicals.
Oh, do you? Really?
Well, yeah, because it's the reason I actually get into the market. I have to see X, Y, and Z happen. Obviously, I have my fundamental reasons, but the timing is extremely important. When I'm getting into the market, what I need to see technically. So obviously, the fundamentals are what helps me hold that trade and gives me greater conviction. But I need to see what I need to see technically. Like I feel like it has. Okay. Yeah, I feel like it has a bit more of my decision making, a little bit more.
Oh yeah, that's probably.
What's your view on that?
Well, I tried also like 100% fundamental, just not looking at the chart at all. Worked for me for quite time, but I had to do position trading.
When was
traded
this?
for. When I left the fintech company, because then I was trading, like, for example, euro and Polish zloty exotic pairs, because Polish zloty had a high interest rate, so I was also getting paid swaps and doubled swap on Wednesday, so I was making a lot of money on this. But I was holding position for like 3 months, and I was just checking if something changed regarding ECB and the National Bank of Poland. So I was just doing fundamentals. I wasn't looking at the charts at all. So now I believe it's about still 60-70% fundamental and 30 technical for me.
Okay.
Yeah, the issue is it's like, obviously you can have a fundamental view, but then your timing could be so off. You have to understand where those key areas are, or where that key level is to come in and buy or come in and sell. Of what you can just get taken out so many times. I feel like if you just try and go in fundamentally, how many times are you going to get taken out?
Yeah, that's true. You need to either have really wide stop losses and just
exactly. You have to have a big bankroll if you want to just do that, or go in with the position trading, as you say. And
that's not too much profitable, because then the market goes against you. Does the correction. So yeah, it's probably. The technical is also a very important aspect. Yeah, I don't want to say that it doesn't play a role in it.
Exactly.
Yeah, because we were talking about the PMIs, actually, how they react, especially when they cross in the 50 line. And basically, I traded it because fundamental caused the euro to be bullish. It went up, and then usually it does a smaller correction, and then does one more move. And that's where I applied technical. But yeah, it was fundamental bias, and then just technical, just confirmation for me.
Yeah. For me, when I'm my technicals, what I'm looking for, so obviously I have my fundamental bias. A lot of the time my entries are based on pullbacks. So when I see the price pulling back, obviously if it's been trading to the upside, because let's take euro dollar as an example. Euro dollar is trading to the upside because the euro economy is strong, US is not performing too well, and we get this decent pullback for euro. That's, for me, there's a couple of things how I look at that. One, obviously something that I learned working with real traders is that when we get those pullbacks, it's technical, it's profit taking, correction, but it is manipulation. It is like stop hunting, it is, liquidity sweeps, all that. That's all that good stuff that I'm looking out for. And then, because there's so many times when I have a view and I get the view. This is one thing I was talking to Jake and Angel about on the stream before. I have a very good view on where the market's going, like very accurate. But it doesn't mean that I'm going to trade that well, because there's a whole different thing. That's psychology. Yeah. So there are times when I will call the market absolutely correctly for a good period of time. And, when we see those, my point is when we see those pullbacks, you get a lot of people, on X give me stick. They're like, I told you the dollar's going to start strengthening. It's like, wait. There's this liquidity sweep coming into play, and then we bounce, and it's like, hey. So, yeah, man, I'm just looking for those pullbacks, basically.
Definitely agree. I would challenge anyone to go to see all our live streams. I would say it's about 8-9 times out of 10, right about the direction of the market. I really do, because I watch market back and I know what we said on the live stream. So, yeah.
But yeah, as I say, trading's a completely different thing, though. Psychology, when I actually execute and I'm in that trade, there's still, like, I'm only human at the end of the day. I deal with life pressures, and there's only so much how much robotic I can be and how much mechanical I can be.
So do you agree? We must be very robotic, and just to put aside psychology as much as possible.
We were having conversations similar to that. It's just becoming a robot. That's simply it.
Yeah, exactly.
Okay. Well, we know where we need to go. Just put a chip in our heads.
Yeah,
it's coming. It's coming.
Actually, I wanted to ask you, because we are talking about also the algorithms. Do you think there are algorithms on fundamental analysis, like doing the expectations of different economic indicators, collecting the data, and then based on it, building the expectation and buying the currencies?
Yeah, 100%. Yeah, there are. That's why, no one, when we see those spikes in NFP, no human is catching those moves straight away. Those are programs, algorithms. Like those are the algos, 100% trading the news release straight away.
Yeah.
Very, very well.
So just percentage-wise, trying to guess how big a chance or how high chance is that this fundamental is going to be positive or negative for the euro or dollar.
What's that, sorry?
Like, how high is the chance of this news are being positive or negative for euro, and then trading?
So it's working it out.
Yeah. So collecting the data that were printed.
Oh, that's what you're asking. Yes, correct. Yeah, exactly.
Right. But this is scary, because this is only going to be more prominent. There's only going to get stronger computers that are able to process this data quicker than we're able to process it.
Well, yeah. It's already happening, like on a big scale. That's why I said we need a greater edge.
Again, it's evolving every single year.
I think banks are doing it for like decades already. They start very early with this algorithmic trading, and I think even with this kind of a fundamental expectations, like higher chances for this becoming positive or negative for a currency.
Yeah,
a very step ahead. I would love to have a peek to that. Yeah,
maybe you guys can build it.
We should clash.
It would be a lot of work.
Yeah, it would be a lot of work. It'd be a lot of work, but I think we could do some beautiful things, Jake.
Yeah, I think so.
Right, get started now.
The only probably aspect that I'm very afraid of, that you can't do like these events like wars or a trade war from Trump or Russia Ukraine. But you can't build it into algorithm.
At least not makes the market. Well, you've got kind of like a basis of what really happens in a circle. I mean, with Israel, the Middle East, like that's happened multiple times over the last 50 years.
You can.
It's all history. History just repeats itself, and that's it.
Yeah, probably with the help of AI, and 2 years sitting, 24 hours.
You guys have got 2 years, right?
2 years what?
2 years to build this system.
Yeah, give it a go. There's something that I wanted to note as well. So, what you were saying, Jake, about being caught off guard by certain things like Trump and stuff. I think we have to remember that a lot of the markets are built up on, like pricing in. Because when you go back to October, end of September, start of October, dollar like rallied hard. And that was because obviously Trump started winning the polls. This was the Trump trade. People were anticipating bullet. The rate cuts he is going to be delivering. Well, the lowering of taxes, the being pro-business, everything. It was going to be bullish for dollar. So we had all that pricing in. Then come January, we had all that unwinding.
Yeah.
So if there's a way that, I know there will be a way, it's just figuring it out in terms of code, algo, but all that pricing
and expectations.
Of expectations. And then the unwinding of that, because that is clockwork, that sort of stuff.
That's actually what I wanted to say. That's what moves the fundamental analysis. It's not the news, the release, if it's not the different data, but it is the expectations that are based. So if we do inflation again, the inflation example, so basically, you might have few indicators like the spending, the income, retail sales, and based on those, you build the expectations on what can be the inflation, and then the inflation builds expectation of what can be the possible rate cut or rate hike.
Exactly.
So yeah, it's all basically being played way before the fundament or the news are even released. So yeah, that was a really good point that I forgot at the very beginning.
Yeah.
Yeah.
Here's something for you. It's something that I was back testing a while ago before, but I want to dive back into it. But I found there was a little bit of an edge with it. So, every week, right? So for anyone that doesn't know, the figures that you see on Forex Factory, these are all median numbers. So they're all compiled because all institutions like JP Morgan, Goldman Sachs, all the big boys submit their own forecast for what they expect for the number. Obviously, their own informed view, and then you get that median. So that median is not usually released until Friday. So they released for all the key data for the coming week. They finally got, everyone submitted their numbers, and you got the median forecast there on Friday. And then I've seen it a few times. I need to get back into some back testing on it. But once that figure's released, that expectation, say for example, we're expecting stronger AU CPI, so higher AU CPI, that's going to be bullish for Aussie dollar. It's going to push back rate cut bets. That we'd see some strength early part of the week, Monday, Tuesday, pricing that in ahead of the event in anticipation that number's going to be higher. So it's worth looking into.
That's interesting.
Do you understand?
I've
seen it a few times. Confidently, I can say that, but I haven't done enough back testing.
And it's working from what you've seen?
Yeah, from what I've seen, it works.
Because if you don't want the median number for forecast of the fundament, you need to then pay like unholy money for Bloomberg, right?
Exactly.
So
exactly.
It's not for retail.
How much is Bloomberg?
Bloomberg's like $5,000 a month.
Yeah.
Okay.
Yeah,
Which not is for really retail
$5,000.
traders
Yeah.
to afford and have all the data and then work with those data, because there's a lot of indicators economy that you want to watch, and you're not going to be able to read all the readings from the banks. And then
How does Bloomberg get all of that data? It's quite incredible.
Well, they cooperate with these companies. When I worked for the fintech company in Poland, we basically were providing them with the data as well. Like, what are our expectations about that?
So you think that if they're providing, if your company's providing Bloomberg data, you then get a discount of the software, or is it just what you do?
I think it's paid cooperation, like providing the data. Also, we were awarded by like third best analyst at that time for Bloomberg, like on certain economic data, the fintech company I work for. So it wasn't my data, it was our analyst. But this is basically how it works. So the banks, institutions provide the data from the analysts.
And just on that point, this market, by the way, it's a lot of why the market moves is, if you can get your hands on information, information's,
I was just thinking about that. I love that this is a market from someone living downstairs can access it. Someone living in Bangladesh can access it. Someone in China. Everybody can access the same information and trade the same markets. And everybody has, well, I mean, if you have Bloomberg, maybe you have a little bit more of an edge, but everybody really has the same edge.
Unless
so
your
to say.
uncle is Jerome Powell, then
well,
that would be nice.
Years ago, so the Swiss National Bank, the SNB, there was a former Swiss National Bank chairman called Hildebrand, and this dipshit, basically, he if you're going to do it freaking properly. But his wife had a Forex trading account. Yeah. And obviously every time before the decision, obviously he's telling her what he was going to communicate. She was trading it and making a shitload of money. And this was investigated. He's found he had to resign. I don't know what happened to him in the end. But so at least get someone, not your wife. You're going to do it right. But my point is a lot of insider stuff happens, of course, as well in these markets.
When you create a broker account, you need to mark that you're not politically like.
Yeah. Oh, really? Yeah. Oh, I've never seen that.
Yeah. You can't have no one with your families or like friends to be politically interested or be in politics or central banking and so on.
I never saw that.
Yeah. Because you can get the insights, and when you have the insights, if I'd have the insight, I would be trading better probably.
Yeah.
So
well, of course, you moved the market, so
Right now, as we've been touched upon, people need to get into coding, trying to code their strategies, because we are competing with machines, and at the end of the day, we are all busy with our lives. It's hard to be in front of those charts, and the more that we are in front of those charts, or the more active we are as humans in front of the screens, the more prone we are to making mistakes. Or just when you have a lot of activity in the markets, you are subject to potentially losing. The more people think that
Yeah,
more.
it is, isn't it?
It
is,
is.
yeah.
It is.
You're bound to lose money if you stay active in the markets. So less is more.
Yeah.
So if you can get a robot being disciplined and executing in these specific times when you know you have edge, then that's great. So I think that's the way we're going, and that's eventually it will just be machines trading.
And you also
be
have
a tiny percentage manual.
You think so?
Yeah.
We end up having, because AI is going basically where you're prompting it to code for you. So do you think now the future will be traders having a platform where they can prompt an AI to trade a certain strategy, and then they send it in to the battlefield to start trading?
Well, I'd like that. I'd like to see something like that. But obviously, you could get ChatGPT can write code for you.
Yeah,
You know,
definitely.
can write full on
Easily.
code for you. In terms of what you said there, it sounds interesting. I don't think there's any platform like that right now in terms of.
Not for a
Which
trading
one-
strategy, but
Yeah.
for other platforms. So, for example, if you want to code a website, then
Yeah.
you can say exactly what you want, and it's going to code what you want, and then you just
It does. It
Yeah, it
does
does.
for you.
It
It,
is,
it
yeah.
does for you. I build like I'm
trading.
I'm using this indicator. I also tried the robot, but using the indicator very easy. You go to Pine editor in
Yes.
TradingView, and I wanted to highlight levels which ends 3s and 8s. We're talking about a live stream. I like 3s and 8s, the numbers, because
Yes,
market
yeah,
really
you showed me
react
that.
there. And so I went easily to AI. I said I need to build this, and then it gave me a code. I pasted into TradingView. I had an indicator that is as easy as it to do code or to code the robot, and it also can backtest for you, so you can tell what is the strategy about and ask if that would work, or what's the win rate on it. You can go back and forth with an AI, but it can help you a lot.
Facts.
Okay, so a question for EA. If you could implement anything to do with fundamentals into the EA platform, what would you implement for traders?
Good question. I would like to see a handbook for dummies. So, someone types in, for example, like all sorts of things. So data, you'd be able to type it in and it gives it to you in the most simplistic form, what it means. Even terminology, because people always ask me, oh, what's dovish, what's hawkish? All these different terminologies like bullish, bearish, all these little terminologies, just like a dummy's handbook for fundamentals.
encyclopedia, stuff like that.
Exactly. There isn't anything really like that.
Yeah, that's
Something
true.
like that would be amazing.
That's
Integrated
true.
on a platform.
When you're looking for terms or just indicator, I don't know where I went when I wanted to learn a specific indicator. Probably you find something on internet. I don't think some like broad encyclopedia of all the terms you don't find. Yeah, that's a good idea actually.
Yeah.
It's a really good idea.
Yeah.
Or even, I mean, I know you can do this yourself, but there are ways, it's just having the developer capacity to do it, but get an API so you have a dashboard. Say, for example, you've got the E8 dashboard, but the E8 dashboard puts into different channels. So you've got GDP there, CPI there, all the high impact data points, the latest releases. It just, every time it comes out, it's automatically populated in this dashboard. So I know this is the high impact data, and you could easily click Euro, GBP, and just see all the high impact data for that specific economy. And it's updated, like even if it's updated every other day or whatever, but all the information's there rather than you flicking through a Forex Factory and all
Yeah,
that.
so properly update the calendar, like do really nice version of
Yeah.
it, upgraded one. Okay. Yeah,
Or
those
maybe
are
even
good
more
ideas.
simplistic, but
Like with just thumb up or down from Ken on the fundament.
just Ken's thumb cut out on a photo.
Yeah. And-
High impact, low impact.
yeah.
It's a good idea. It's a good idea. Okay. Well,
Yeah, I think we've discussed.
I mean, I could go on for the next couple of hours. I can't lie, but the viewers probably.
I felt like
can't.
we're just trying to convince you to join the team. I hope we've learned something at least about fundamentals.
Yeah, absolutely. I continue to learn from both of you about fundamentals. It's interesting, and I think traders don't know how impactful fundamentals actually are.
Yeah.
And I hope that this will be something now that they'll look into.
Yeah, maybe on that note, I would just say that we basically host every Monday and Wednesday with Ken, who does a really good job on fundamentals, live streams, so they can basically join and learn. Because whenever you have practical examples, you learn the best. Like now the theories, when you find out like what's the GDP, of course you can read the theory, but the definition of it, but practically when you see the data, it's the best. Yeah. Okay.
Thank you so much.
Awesome.
Thank
Thank
you
you
so
guys.
much for being
Enjoyed
here.
that.